So now finally we are back in the game. So yeah, thanks a lot for your patience. And I do really appreciate that you made it today, and I'm really glad to see you all on today's webcast. I never take your attention for granted, and that's why I always do my best to bring you the most in this webcast. So that's why today I want to cover 6 probably most major questions when it comes to trading in smart mode, in hodl, and as well as in automated trading. And they are basically related to the risk management. So how to minimize your loss and how to have full control over the risk. The next biggest question is how to maximize your returns using all the tools that we have at Bitsgap in automated mode in smart trading, and as well what makes the SBot different from the Classic when it comes to trading on the sideways and as well as on the rising markets. So we will go step by step, and I will show you some pretty straightforward, easy and yet efficient strategies for the automated trading. So let's go and jump into it. So we're gonna start off with, let me go to the platform. So we're gonna start with the automation. The magic about automation is that in automation you basically have a steady return on a daily basis. So if you want to see USDT or Bitcoin or BNB like inflow to your balance on a daily basis, then automation is something for you, because here you have the robot to trade on your behalf. Sorry, I just saw that you have some audio issues with me, but yeah, no, it's okay. So anyway, so when it comes to automation, in automation you have this robot that basically trades on your behalf, and whenever it spots the micro opportunity to buy low, it buys, and whenever it spots the best time to sell what it purchased at a higher price, then it just grabs this opportunity and sells it. And that's exactly what you see here on the chart. You see my bot trading on, let's switch to 1 inch to USDT. That's my top performer right now. So you see all these circles on the chart. So these are all green circles that represent executed buy orders. So that's when the bot spotted the best time to enter the market with a buy order. And all these red circles, they represent sell orders. So these are basically micro trades. And the thing is, in automation, you are almost indifferent towards the price at which Bitcoin, for example, trades today or tomorrow or the day after tomorrow. So here it's just that the bot always can find these opportunities regardless of the trend direction. So it can generate steady returns on the sideways market when the market moves like this. It can also generate steady returns then the market is rising. Yeah, for some reason you see this green candle popping out, but let's switch to BNB USDT. Yeah, it's not the case for this one. So yeah, let's continue. So on the sideways it generates returns, on the rising market, and as well on the downfall. You see here somewhat I can say that we are in a shortfall over here, BNB trading to USDT, and even on this short-term downfall, but actually it looks like it's more like the sideways market. But anyway, you see this period of the downfall, it has managed to make some trades, and that's why, like, until today it's been like 2 days past, and it's made $5, which is approximately almost 1% per day. Though I would focus on 1 inch, because here you see it's been trading for like 26 days, and throughout this period it's been steadily making around 1% daily. So that's around $3 per day. So you end up with around $90 per month. So $90 to your initial investment of only $300. That's a hell of a lot. I mean, that's $90. That's 30% in a matter of just 1 month. So it's around 350 and 60. Yeah, if you also take the compound effect, then even more. So it's around 360% annually, actually. So, and I'm pretty confident with this bot, and I'm gonna keep this one because I'm pretty satisfied with the results. And that's why automation is a game changer, because you don't have to waste time on manual trading. You don't have to scan the market all the time, like every 2 hours or something like that, on anomalies that you spot, like whether you should adjust your take profit or stop loss. Here in automation, everything is straightforward. You just select the strategy, and for the automation we have at Bitsgap, we have actually 2 strategies. So to make it simple, let's just choose a random cryptocurrency pair. Let's say we want to trade AVE to BUSD, and let's actually switch to the demo mode where I have virtual money to trade with. Maybe let's use another one, just maybe ARPA to USDT, why not? So here the thing is that if you think the market is gonna move sideways like this, and it's been actually moving sideways for some time, as you see over here, it's like kind of more or less sideways market. So if you anticipate that it's going to continue this formation, then the best strategy for you is the SBot. So we made SBot specifically for the sideways market to take the most out of it. So it's going to generate you more returns than if you would have launched it, like the bot on the classic mode, with the same settings, with the same amount of grid levels, with the same investment. The SBot would make you, like, it would bring you more returns. So if you, on the other hand, think that the price is gonna appreciate, so it's gonna move like this, and it's gonna break the resistance line, and it's gonna establish new higher highs, then stick with the classic bot. Because basically the classic bot distributes your investment in a way that it buys more as the price goes higher. Whereas in case of the SBot, it always spends the same amount per each grid level. So per each level, it, for example, where you see these green lines, these are limit buy orders. So this is where, imagine that on each grid it spends $10. So the SBot would buy coins using like $10 per each grid level. So as the price falls, the price of one coin becomes cheaper, and that means for $10 you can now buy more coins. So that's the case for the SBot. And when the price rises, it also sells your coins worth $10. So if $2 are worth $10, then it's going to sell 2 coins. If now 1.5 coin is worth $10, then it's going to sell 1.5 coins. So that's the case for the SBot. Whereas when it comes to the classic bot, it always buys and sells the same amount of coins, okay? So that's why it's pretty much indifferent towards the price. So if 2 coins cost $20, then per this grid level, it's gonna spend $20 to buy it. If 2 coins now cost, let's say, $2 as the price has fallen, then it's gonna spend exactly $10 just to maintain this target of buying and selling 2 coins all the time. So that's why you will notice that the classic bot, basically, it outperforms the SBot significantly on the rising market. And that's why I don't really want to digest this. and elaborate on this, because this would require me to go into math details and all that stuff. But just for you to make it simple, the classic bot is for the rising market, if you think the price is going to move like this. And if you anticipate the market to move sideways like this, then SBot is your ultimate strategy here. All right. So let's assume that for some reason this chart is lagging, and I don't know, that has never been the case before, but yeah, never mind. It's not pumping like this right now, even though this would be actually great if it would pump like this. Well, anyway, let's assume we anticipate the market to move sideways. Then I'm gonna select the SBot. Okay. The next thing is to determine the trading range. So the trading range stands for the area where I want my bot to trade. So let's say I think that the lowest price should be over here. It's pretty much where we have the support line, and my upper price up to the previous higher high. This looks like a pretty decent trading range for a short-term perspective. Okay, so in this case, the bot is gonna trade only within this area. So whenever the price, like as far as the price stays within these boundaries, the bot is gonna trade. It's gonna look for these micro trade opportunities to buy low and sell high. Okay, so that's the thing related to the trading range. The next step for you to do once you define your trading range is to define the amount of limit buy and limit sell orders you want to plot within this area. So this is known as grid levels. So for example, I want to have 40 grid levels, and now look that the gap between my orders increased, and the gap between is around 0.93%. That is known as the grid step. Okay, so basically the margin I take here is 0.93% per each trade. Okay, and the fee is already taken into account. Okay, so in fact the gap is somewhere around 1%, but since we deduct the fee, we display this value. Okay, so all the return you see on your active bots, it's net of all fees, and that's a pretty cool thing. And I can tell you that very few platforms actually offer this kind of sophisticated calculation, but here we take the fee into account, and that's why the return that you see is basically your net profit. So that's the exact amount that goes straight to your balance. Okay, so that's the cool thing. Yeah, actually I just smashed. No, it's all right. So yeah, it was ACM. What was the crypto? I think it was ARPA. Yeah, the one we decided to trade. So that was the trading range. Here we go. So we selected 40 grid levels. So the more grid levels you plot, the more money you have to allocate. So in this case, you see I have 4,000. Let's assume I want to invest only 500. Is this enough for this configuration? Nah, it tells me that this is not enough. And if I want to continue with 40 levels, I need to increase the investment. Or if I don't have $880, what I can do, I can adjust the amount of grid levels. So that's exactly what I did. And instead of 40, now I can afford only 23 grid levels with the investment worth 500 USDT. Okay, so that's the thing that you always have to play with when it comes to the investment allocation. So the system will notify you whether or not you can afford a selected amount of grid levels for the investment allocation that you made. If it's not, then it's gonna adjust it automatically if you want. So either you increase the investment or you adjust the amount of grid levels. Okay, So 23 grid levels is pretty okay for this trading range. The grid space in this case is 1.59%, which is a pretty decent value. Yeah, so the way I define my grid step is basically derives from the amount of successful trades that I have, and I look at these successful trades and I analyze what is the average grid space that I used. So for example, when trading 1inch to USDT, you see, as I already mentioned, the return that I get here is 1%, and that's something that I'm pretty impressed with, and that's why I'm gonna look at these settings, so that I'm gonna use pretty much the same settings for the next crypto I want to add in my automated portfolio. So here I have the grid step of around 0.78%, and that's exactly 23 grid levels, you see. So what we selected for the what was this? ARPA? No, that was not ARPA. This was, yeah, that was ARPA. So for ARPA, we defined that we're gonna stick with 23 grid levels, yeah, with the investment of 500, like this. So it turns out that in 1inch trading to USDT, we have the grid space of 0.78%, and having this configuration, we get 1% per day on average. That's okay. But I also know that I had some other successful trades, and I do remember that some had 1% of the grid space, some had 1.2% of the grid space, and I got on average around from 1 to 2% per day. So this is the value this is the range I'm gonna stick with. I'm gonna stick with the range from 0.78 up to 1.5 around. So what is the current grid step that we have here? So we had 23, right? This range, investment 500. Yeah. So for this trading range, since we have this wide range, even though we have 23 grid levels, the grid step is larger compared with the 1inch trading to USDT, where we have 0.78% of the space, but also 23 grid levels. That's because the trading range we use here is wider compared with the one that I have on 1inch trading to USDT. So what you can do, you can actually squeeze your trading range to make it narrow, and you see now it's around my target range. So I'm pretty okay with this configuration, and that's it for the grid spacing and grid levels. So once again, you have questions regarding the optimal grid step and the amount of grid levels, and the answer here is look at your basically look at your winners. So my current winner is 1inch trading to USDT, and I also remember my past successful trades where I have on average this range from 0.78% up to 1.5, and this is my optimal range, okay? And I stick with this because it has proven for me to be successful enough, and that's the way you play with it. Define your optimal trading range, and the grid spacing range, and you can actually use mine, which is from 0.78 up to 1.5%. Yeah, and when it comes to the amount of grid levels, yeah, the amount you set is highly correlated with the grid step that you will see in this section over here. Okay, so it's about really playing with the number of grid levels so that you get your optimal grid spacing. Okay, so it's basically about grid spacing only, and you have this section over here to play with. So if I say plot 30, then it's going to be 1.02%, which is also pretty fine, but since I increased the amount of grid levels, I now have to increase the amount of investment. Okay, so that's something for you to remember. Okay, so it's always about playing with the investment allocation, and grid levels to adjust your grid spacing, okay, to maintain your target range. Okay, so for you, target range can be different from mine, but mine is already mentioned 0.78 up to 1.5. Okay, so that's the way you play with the grid spacing. Okay, and there is no golden rule like which configuration is the best one, because it really differs depending on the crypto that you trade, because some coins are more volatile, some coins are pretty steady, some coins are heavily rising, and at the same time some coins are moving sideways, and some are even falling. So that's why it's always case by case. Okay, just make sure that you always analyzed your past trades and you look at those that have proven to be successful, and based on this success you look at the grid spacing that you used, the amount of grid levels you used, and the average investment that you allocated. Okay, so these are the things for you to play with, and once again, there is no golden rule. My aim on this webcast is basically to show you how to use these tools to create your own best strategies. Okay, because once again, there is no golden rule when it comes to automation, smart trading. It's just that we have this set of profit maximization and risk management tools that are designed to maximize your return and to minimize the loss, and that's exactly what I'm doing here. I'm showing you, basically I'm giving you the keys and showing you the doors, and it's up to you to select the key and the door you want to open. Okay, so yeah, let's continue and let's see what else we have to cover here. So in order to maximize your returns, you need to switch on the trading up. So the thing about the trading up is that it enables the bot to follow the rally once it breaks the upper price. So initially, the essential rule for the robot is that it trades within the trading range, unless you set the trading up. Because in this case, once you enable the trading up, basically the bot starts to follow the rally, and you will see your trading range following the rally. So for example, that's our point A. Okay, this is where we started, and let's assume that some time passed, and now the price, and let's use the ghost feed here, like, let's say it moved like this, and then bam, now it's trading over here. So thanks to the trading up mode enabled, your trading range would successfully follow the rally, and you would see your trading range around this area. Okay, and I have some best examples here. So this one, this is my initial trading range defined by these yellow lines. So this is where I expected the bot to trade. Okay, I did not really thought that the price would go higher, but I enabled the trading up in case it goes higher. And I was fortunate enough to enable the trading up, because you see how many trades it made during this rally, and now my trading range is up here. That's only thanks to the trading up that I enabled. Okay, otherwise I would just get stuck, as in this example. So you see here I don't have my trading up enabled, and that's why I got stuck. Once the price breached the upper limit price and went above the trading range, you see my trading, it just halted, and you see no trades in this area, and that's because we did not switch the trading up on. So that's the trick, and that's basically the ultimate solution so far that we have, which really like significantly maximizes your returns, is when you have your trading up enabled. because by doing this, you let the bot to trade whenever the price goes higher, and you don't have to stay in front of the computer like the whole day. You can do other things related, like you can spend your time with your family, you can go to sleep and whatever, but the bot will just follow the price rally if it goes higher. So for example, the price of Bitcoin is now at around $63,000, okay? And you don't know if it's gonna trade 70 tomorrow or 80 tomorrow. But if you enable the trading up, then most likely, not most likely, it's guaranteed that if the price of Bitcoin is gonna be around 80,000 tomorrow, then you will see that the bot made all these trades on this rally, okay? So it would make like hundreds of trades. That's because of the trading up enabled, okay? So use trading up to maximize your returns, and use trading up if you want the bot to follow the rally, okay? Otherwise, if you don't have it, then each time you see the price breaking the upper limit price, you would have to close the bot to open new one with new settings so that the bot could continue trading, okay? Regarding the stop loss, that's the crucial instrument that we have in risk management, which basically limits the loss, okay? So let's switch to any random crypto. Let's say QT trading to USDT. And let's say I want to enter the market with these settings, but what I can clearly see is that here we are now, like pretty recently we bounced off the support line, right? But still there is a risk that the price can revert and go lower. So that's why I'm gonna I would set my stop loss around this area, below the support line, which is exactly below my trading range. So in this case, if the price would fall down to the lower price and then breach it, the next stop would be at the stop loss. So this is the point at which it would exit the market. It would sell all of the base currency, and in this case that's the QT, and this is where we have a limited loss, because otherwise without the stop loss you would see the value of QT falling further down, and that's something you don't want to happen. And that's why stop loss is a must to have full control over the risk. So you know exactly that this is where the trading halts for you. This is your area where you have the maximum loss, okay? That's why stop loss, guys, is the must, and I always say that because it really is the crucial thing in trading. Basically, the formula of success in trading is, first of all, adequate and proper risk management, and the next thing is probably your skills in technical and fundamental analysis that you use to find the best coins to trade now and the best price to enter the market, okay? But at first place, it's always the risk management, because when you have an adequate risk management, and I'm gonna show you this in the smart trading mode, the thing is that your risk should be lower than the potential reward you can take from the market. So for example, here is the random trade, and I have take profit, stop loss, and the thing is that, let's say 25%. Okay, so it seems like I don't have, no, actually I do have USDT. Yeah, so, and let's set 5% here, let's set 10% here. So basically here in the smart trade mode, you can set multiple take profit, which basically secures your returns as it gradually sells your position, which is something that you should use in order to have a better control over your position. so that it gradually fixes the return. Okay, so here you see, if all these price levels, all of these take profit areas will be reached by the market price, then you can see the reward of worth $39. Whereas the risk that, for example, you take in this trade is 3% down from the entry price. Okay, so that's exactly minus $10. So by taking the risk of $10, the potential reward is around $40. So the ratio is 1 to 4, and that is more than enough to justify this trade. So since you have this ratio bigger than 2, this trade is justified. So the aim here is to focus on, enter the market only when your risk is lower than the potential reward you can take from the market. And this applies not only in the smart trade mode, where you manually set all of these take profits and the stop loss, but it also applies to the automated trading, because here you also have the stop loss and you also have the take profit. Trade only on those coins where you see an optimal entry and an optimal stop loss, so that the risk is always lower than the reward you can take here. Okay, so let's switch back to my real account here, where I have 1inch. So the cool thing about 1inch is that it has managed to make 25% for me so far. Okay, and initially my stop loss, I think it was set somewhere around this area. So I started, I think, over here, and my stop loss was around this area. I'm not sure exactly, but I think it was somewhere around this area. And I do not remember where it was initially, because from time to time I adjust my stop loss. So right now I see that the price of 1inch has substantially increased, and that means that now the place where I should plot my stop loss has changed, and that's why my stop loss is over here, because once the price breaks this support, most likely it will fall down to the next key support area, and that's why this is where I have risk control. In this case here, the stop loss is basically my my take profit. Why it is the take profit even though the price is now trading above the stop loss? That's because my stop loss is higher than the entry price that we had initially. So if the price falls to that point and it triggers the stop loss, I will exit with approximately around, I guess, 17 or 18% of total return or something like that. Okay, so this is where, by adjusting the stop loss, by moving it higher as the price goes higher and establishes new higher highs, your stop loss at some point becomes your take profit. Okay, so in case if the price falls, it will secure your returns over here in this area. Okay, so that's another cool thing about the stop loss, is that at some point of time it becomes your take profit. Okay, so that's why it really makes sense at least 3 times a week to spend like 5-10 minutes to scan your active trades and to see whether the location of your stop loss is optimal right now. If it's not, if the price has risen substantially, then do what I did. I just grab my stop loss and plot it where it should be optimal, like this. So initially it was around this area, now it's here, and it has become my take profit. Let's see what I have for the BNB. I'm not even sure that I have the stop loss for BNB, but if I would have it, I would not move it, because still only 2 days passed and you see the price has stayed in pretty much the same area as we entered the market. So that's why it really makes no sense for this trade to adjust your stop loss. Okay, so it really takes 5 to 10 minutes to scan your automated bots, go to the smart trade mode if you have some open positions, like pending orders. For example, I have some pending orders here. And yeah, that's pretty convenient, easy, all-in-one platform to trade your exchanges. You see the amount of exchanges that you can link, and that's a very cool thing, because you can launch automated bots on Binance, on Bitfinex, and on other cryptocurrency exchanges as well. So you can have, for example, you see these are 2 strategies on Binance, but you can also see maybe one trade, another on okex, another on KuCoin. Yeah, so that's how you basically diversify and have a full control over all of your accounts that you have on Binance, on okex, KuCoin, all in one platform. Okay, so full focus on Bitsgap. Here you have the opportunity to trade on all exchanges, to launch automated bots on all exchanges, and that's a pretty cool thing. So yeah, we covered the SBot, the difference between the SBot and the classic bot, how to set the grid spacing. We covered the trading up to maximize your returns in case if the market goes higher and you want the bot to follow it automatically. We discovered the potential of the stop loss, which initially acts as a area of limited loss, but at some point you will discover, as your trade becomes profitable, then your stop loss becomes your take profit as you drag it higher. Okay, so we covered this, and these are all the tricks that you can use in automated trading. And the cool thing about Bitsgap automation is that you have these key metrics to monitor and to analyze your performance. And pretty soon we will add a new dashboard layout where you will see additional metrics that will help you to analyze your losers and to analyze your winning strategies. Okay, and you can compare these results with one another. So for example, using these metrics that we will add, you will be able to compare your winners with one another to see which one is the best in terms of daily return, and you will compare this return with regards to the grid step that you use, so that you find your optimal one, like which configuration for you has proven to be successful, and you will finally discover your optimal trading range. But you can actually do this already now using only this metrics. So you see I have daily returns that I can analyze, and I have the average daily, which is displayed over here. So you see, just by comparing these 2 trades, I can clearly see that 1 inch, it outperforms my bot that I launched on BNB, yeah, where I have only 16 grid levels, and maybe I should have launched it with more grid levels, because you see these blind spots where it did not trade. You see over here, no trades. In this area, no trades as well. And actually this is a pretty blind spot here, no trades. That's because the grid space that I have here is larger than the one I have on 1 inch, and that's why I skipped this opportunity to grab these micro trades here. So I think I'm pretty confident that if I would have launched this bot with 23 grid levels instead of 16, I would see pretty much the same result as I have on 1 inch, which is around 1%, whereas on BNB it's only 0.8%, which is also pretty good. Yeah, I'm not complaining, but still, you see, it's lower, and that's why I have this ability to compare them. And I made this conclusion that it would be better to launch this strategy with 23 grid levels at least, so that my return would be slightly higher than the one I see right now. Okay, So using this data, you can close the bot and launch it with new settings where you would plot 23 grid levels to see around 1% per day. Okay, so that's how your logic should work when it comes to automated trading. You have everything here to analyze the performance, to find the ultimate strategy that brings you the most. Okay, so let's go quickly back to the agenda of today. So we covered 5 steps when it comes to automation. First, you define the crypto that you want to trade. Yeah, so you may have your own list of favorite coins that you trade, or if you don't know which crypto to trade, then thanks to the recommended strategies that we have here based on top performance, like these are the cryptocurrency pairs on which the bot made the most during the period of last month. Okay, so at least using this data you can make projections that you can expect, well, if not close to this value next month, but maybe around 50%, maybe around 100 even percent. Yeah, so the past outcome, it never guarantees that you will see the same result next month, but at least you can use this as a sort of benchmark. And as I see 152% on DREP to USDT, this tells me a lot. This actually tells me that the liquidity here on this coin is enough, and the interest of the market in this coin is big enough. And that's why, because otherwise, if this would be an uninteresting coin, you wouldn't see 152% in bot profit. So that's why you can use this as a sort of benchmark and expect that this coin will bring you decent return next month as well. Maybe not 152%, but maybe 70, maybe 50%, something like this. Okay, so that's the case if you don't know which coin to trade and you need some suggestions. So use this recommended strategies section over here, okay, to grab some trade ideas. So anyway, you select the crypto. The next step, you define the trading range, okay, and the wider is your trading range, and let's use a random one, maybe this one. So the wider is your range, maybe, yeah, maybe like this one. Okay, it defines the investment horizon. So the wider is the trading range, the longer it's gonna trade, and this can be the bot active for like 1 year and even more. Okay, because you see the area that we just grabbed from 300 up to 800. That's a big area for this coin to move. Okay, but in order to cover this whole area, you must have enough of the money to plot all of the grid levels, because if you plot only 23, you see the cap is like 4.71%, maybe not something that you would expect, because you have this optimal range from, as I have, 0.78 up to 1.5, then you prefer to stick with this rule. So maybe this is like 80 grid levels. So to have this wide trading range for the long-term perspective, this requires you to plot 18 grid levels. And in order to plot this amount of grid levels, you must have enough. And in this case, that's actually 2,600 BUSD required to launch this bot with these settings, okay? To maintain this target margin optimal for you, okay? So if you want to launch the bot for a short-term perspective, then narrow down your trading range. It's gonna look like this in this case. Here you can plot fewer grid levels to achieve your target margin, okay? So instead of 80, now you have only 40, and that means that you can now have a lower allocation, okay? And then once you see it breaks the upper price, maybe you have the trading up enabled and it will continue trading, or you will you will manually close the bot and open the new one with new settings where you would set your trading range maybe around this area. Okay, so that's the thing. If you want to spend as less time as possible on automated trading so that you just enjoy daily returns in a long-term perspective, then find those cryptocurrencies there you can afford this wide trading range. Okay, so I almost guarantee you that trading from 300 up to 800 is more or less is a perfect area for the next 7-8 months for this coin. Okay, so it really depends on the coin that you choose and the anticipations that you have towards it. Okay, so once again, wider trading range is for the long-term perspective, shorter trading ranges are for the short-term trading. I prefer short-term because I'm still looking for the ultimate strategy, and that's why I prefer to have short-term strategies to analyze them and to compare with one another. Okay, so that I could share my insights like the optimal grid step spacing and all that stuff. Okay, so yeah, so basically we already covered this topic of how to find your ultimate strategy. And once again, in order to find it, you just need to experiment. You need to use the analytics that we have here to find which one brings you the most. So based on my example, 1 inch, performance that I achieve on 1 inch to USDT is the one that makes me comfortable. And that's why I'm gonna stick with these settings for some time to see whether it's really the ultimate strategy for me, because I really want to grab from the market at least 1%. So I'm gonna experiment whether this configuration is gonna be successful for other coins, and I will calculate, I will count on how many coins it's been successful and it achieved 1% on average per day, and on how many coins it actually failed. Okay, so that's the comparison that I would make to see the success rate of this configuration. Okay, and thanks to the demo mode that we have here, that basically is a risk-free trading simulator where you have virtual money on all exchanges to play with. You can experiment, you can trade many like simultaneously, you can launch many bots, and you can actually launch multiple bots on one coin if it is trading to multiple stable coins. So for example, let's go back to the real account. So let's assume that I want to the restriction on the platform is that you cannot start several bots on the same trading pair. But the trick is that, for example, we know that BNB is not trading only to USDT, but we also know that BNB is trading to BUSD, which is pretty much the same as what we have on BNB to USDT. We also know that BNB is trading to TUSD, I guess, which is also the same. So already we have 3 pairs for BNB where you can simultaneously launch different strategies. Like let's say on BNB trading to TUSD, you can launch the SBot. On BNB trading to USDT, you then launch the classic bot. Okay, and then you can launch another classic bot, but on BUSD this time. But this time, this classic bot is gonna have, let's say, only 40 grid levels. So, and that's the way you use this trick, by trading to multiple stable coins. And not every coin is trading to multiple stable coins. Like there are some coins that are only trading to USDT. So that's why this is, it's a pretty good trick, but it's pretty limited, because some coins are not trading to multiple stable coins. Okay, but still pretty decent insight for you guys to launch simultaneously. I mean, the time difference can be in like in 20 or 30 seconds, because it just takes you some time to select all these configurations and then start the bot. Yeah. But yeah, well, pretty much they will be launched simultaneously. If you want to compare which strategy brings you the most on the same coin, launched at the same time almost. So that's the trick for you to experiment. Yeah. So what basically defines your trading success? We also covered this one. And once again, I repeat, it's all about the risk management, because, for example, one trade can make you, let's say, $60. And let's assume that for each trade, your rule is to risk only $30. Okay? So that means that if this trade was successful and you made $60, this $60 can cover next 2 losing trades. So for example, you set another trade. Here you can afford losing $30 because you made 60 before and now you have $30 left. And you can afford losing on another trade as well, because thanks to this first trade that you made, it will cover the total loss that you would bear in this next 2 trades. So it's really about not being right about it's not about making as many right predictions about the price direction as possible. It's more about having a strict risk management where your reward is always bigger than the risk that you take, because in this case, your reward can cover next 2 or even 3 or even 4 losing trades. So that's the key to success, adequate risk management. And that's why we have the stop loss, we have the take profit, and in the smart trading mode, we have this feature that calculates the projected profit based on the take profits that you set and the projected loss based on the stop loss that you set. So you know exactly before you enter this position, you know exactly the ratio of your risk to return. And here you see for $3.50 your risk, the potential is $11. So that's a justified risk in this case. Since it's bigger than 2, it's a really justified trade. So yeah, that's one example of how you can define your risk management principles. Make sure that your risk is lower than the return, and you will see better results as you follow these principles. Okay. So there was a question about why not just hodl coins, because hodl brings you more returns. Well, it's actually true, but there is a trick. Let's open this chart and let's close these moving averages that I have. So let's assume that we are somewhere right over here right now. Okay, so let's go back to the past. So let's assume that this is where you want to enter the market just by hodling the coin. So at this price, you enter the market and you just hodl this coin, and then the price goes higher. Bam, 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 bam. And at some point, you would think that maybe this point was the highest price, and maybe it's the best time to close the trade. Okay, so here you would close it. Okay, so your return in this area would be forecast. Hold on, this one. Yeah, 72%, which is good. Okay, but I mean, the thing is, are you sure that this was the highest price? Because what you will see next is that the price goes even higher. And this is where you get a bit greedy, because you see that the price pumped heavily and you would make your 200% instead of 70%. And you remain kind of unsatisfied with the results that you made, even though the results were pretty decent. The thing is, in order to avoid this frustration, automation is the solution, because automation, it just steadily looks for these micro trade opportunities so that it always grabs these micro returns from the market, and added up together, these micro returns, they make up a decent return in a long-term perspective, okay? Because another disadvantage of hodl strategy, except the fact that you get greedy at some point when you see the price going even higher, is that in hodl, as you hold your position, the profit that you make is unrealized, and it is only realized once you close the trade. And you can see that at one day your unrealized return is, for example, $500. The next day you open your account and you see that the profit is now around $700, and you think like, well, I'm pretty good at this. But the next day, like that's going to be the third day already, next day you open, you see minus $300, and you get very disappointed, because you should have closed at least like partially the trade, so that at least fixed 60%, maybe 70% of your position to realize some returns. But since you have been holding this position without any take profits and stop loss, you can see that at some day you have plus $700, the next day you have minus $200. So that's something that is really immature and unstable trading when it comes to hodl. And that's why in terms of risk management and profit maximization, as well as securing your returns, automation is the solution, as well as the smart trading is another solution. In smart trading, which is over here, where you have to trade with where you have to combine different order types in order to create the strategy, like limit buy, sell with limit take profit, limit stop loss. You can make it trading as well. Here is where you spend most of your time, because this is a manual mode. This is where you have to adjust from time to time your stop loss, the take profit if you need. But in automation, you don't have to do this. The bot follows the rules. It just maintains this grid step, and it steadily generates returns. So the return that you see in this bot profit column is the realized return already, which goes straight to your balance. And that's something that I really want from trading. I want to have realized returns on a daily basis. And I don't mind that if I would just hodl these coins, that I would make twice more. I don't really mind, because otherwise I would be kind of depressed, because I would really have to worry about my position all the time, as I have my return unrealized. Like 700 today can become minus 200 tomorrow. That's something that I don't want to see. I'd rather sacrifice some returns for this gradual and steady outcome. And automation here is the solution. So answering to your question, yes, in terms of risk to return, hodl is the most rewarding strategy, but at the same time it's the most immature and insecure strategy, because in hodling you can lose everything. And we've seen many cases where coins been trading around, let's say $2-3 and then to zero just intraday, just scam coins, bankrupt coins, whatever. Many cases in crypto. So that's why strict risk management and profit maximization tools like the trading app and the strategy that our bots utilize is basically the ultimate solution to generate steady returns on a highly volatile market like cryptocurrency. So yeah, hodl, you can still use hodl, but I would suggest to make a split. Let's say you have $1,000 on your balance. So you can split it. You can, let's say you can have 50% in automation. You can have 30% in smart trading, and only 20% goes to HODL. Okay, because we know that HODL can bring you the biggest return, but since this is the most insecure strategy, then allocating 20% is a justified amount. Yeah, because even all of these coins that we decided to HODL fail, at least what we've made here in the rest 80% can cover these losses. Okay, so that's why it's always about the risk management and diversification. And on Bitsgap, you can actually diversify by trading in the smart trade mode, which requires you to spend the most of your time. Automated bots, where you set around maybe 50%, but this is where you spend the least time because it's fully automated. Yeah, and it's the most secure, because not only you spread the risk by having multiple buy and sell orders, but as well you have the stop loss automated, take profit automated, and the trading up fully automated. Okay, and the HODL is the one that you basically monitor in the portfolio section here. So let's say I have MXC, the one I'm holding, and I think that I have invested like $100 or something, and now it's worth 325. So that's the coin that I've been holding for almost 6 months, I guess. And I did nothing with it. I just been holding it. Okay, so that's why I made like 3 times more. But I only allocate around 20% to HODL, just to justify the risk that I take in holding. So let's see if you have any interesting questions so far. By the way, the cool thing about automation compared with the HODL is that if the market falls, which is a very unfortunate situation and you don't want to say it, but it can happen, and we have to keep that in mind as well. So here's the perfect example that I made a long time ago and I still use it. So you see, imagine that you would buy a coin here where I have HODL pointing at, and you anticipated the price to continue the rally, but what happened is that the market went downwards. So in HODL you would incur a pending loss of around 7%, but thanks to automation the loss is only 3% here, and that's because the bot was able to generate these returns on the downfall, as it still managed to find these micro trade opportunities to buy low and sell high even on the downfall. Because what I said at the very beginning is that bots are indifferent towards the price direction. They can generate returns on the rising, on the sideways, and even on the falling market. And the pure magic on the downfall is that the return that the bot makes, it will offset the overall loss. And that's why instead of having minus 7%, as you would have in HODL strategy, in automation that's only minus 3%. And once the market reverts and goes higher from that point, the bot will pretty quickly offset not only the negative value change, but it will quickly generate returns. So that's why it's another extra points to automation, which can outperform even simple HODL strategy right after the downfall. Okay, so on the downfall it minimizes the loss, yeah, and it keeps trading and it keeps making money for you guys. Okay, so imagine you have the trading range. It's not the one I wanted. So let's say you have this kind of trading range. So on this trading range, I mean, you would see the bot making money on the downfall, on the sideways, and on the rising, okay? So that's, I mean, when you are totally indifferent towards the price direction. If you have a trading range as wide as this one in this example, then you are really indifferent towards the price direction here, because it may fall down to this lowest point, but most likely it will revert and you will see the price accumulating bigger returns right after this downfall. So, I mean, on the downfall it makes returns, on the sideways and on the rising market. So the last question that I want to answer today is how to multiply the returns. So what is the high yield strategy? Which strategy, using the combination of various tools that we have in automation and this strategy, like the bot strategy that we have, which one can bring you the most? And the answer is here. So by trading on cryptocurrency pairs, like for example 0x to Bitcoin, no, 0x Bitcoin. So trading like launching autobots on the cryptocurrency pairs like 0x to Bitcoin, you are exposed to the value change of two coins, the 0x relative to USDT and the BTC relative to USDT. So the bot would make you returns in Bitcoin here. And if Bitcoin during this period would also appreciate, and you see exactly here, this orange line represents the exchange rate of Bitcoin to USDT, and you see that on this rising market for 0x relative to BTC, the price of Bitcoin relative to USDT also appreciated. So this would bring you the most. So not only you would have generated returns in Bitcoin, as you know that the bot makes returns in the quote currency, that's BTC, but the value of Bitcoin relative to USDT has also appreciated. So we add this up together and that's the 2x return, okay? So you generated return in the crypto that at the same time has appreciated with regards to the USDT. So that's the double effect here. And sometimes you can see even bigger results. But that's one of the, like, that's the most you can take from the market with automation, yeah? By taking advantage of these rising rates of multiple currencies. But at the same time, you take the biggest risk here. Because you know that the rule is, in order to generate the biggest return, you must take the bigger risk. So here the risk is that the value of 0x relative to USDT can fall, and also the return that you generated in Bitcoin can also fall relative to USDT, and that's where you incur the loss of minus 2x, okay? So always keep that in mind, that in order to make these insane returns, and we actually have some real cases posted in the blog. Let me show you guys. One user made from, I think from 1K or something. Where is this story? Yeah, from 1K in 4 months, he made $50,000. And here's the full story. That's the real one. And we had the interview with this guy. And yeah, the strategy that I just showed you is exactly the one that he used, so that he made in 4 months this insane amount of return just by trading automated bots. Here's even the video you can find to watch it. Yeah, but the thing is that the risk here that you take is bigger than the one that you take in conservative trading when trading coins to stable coins like USDT. So when you are trading to USDT, then in this case, you are only exposed to the value change of one coin, which is the base currency in this case. So for example, if you are trading like me, BNB relative to USDT, then your risk here is only in BNB because the value of BNB can depreciate. Whereas when you are trading, let's say BNB relative to 0x, and I'm not even sure if this kind of pair even exists, but imagine if there is BNB trading to 0x, then in this case you incur a double risk, that the value of BNB can depreciate relative to USDT, and the value of 0x can also depreciate relative to USDT. Yeah, because still, even though we are trading in the crypto world, still most of us estimate returns in USD, because in normal lives we spend USD, we spend euro, we spend other local national currencies, and that's why it still makes sense for us to estimate our performance in our local currencies and global currencies. So that's why always make sure that you understand this risk as you trade high yield strategies like the one I explained on 0x relative to Bitcoin. Okay, so this is where you can see, for example, 200% of the return generated by the bot within the period of only 1 month. So this is where you can see this, and that's thanks to this high yield strategy. So okay then, what else we have for today? Yeah, actually I wanted to show you something special. As you know, we are about to release futures bot, which is the combo bot. That's the name of it as of today. And here I have some trades. These are real trades actually on my real account, trading futures in beta mode. So you see I have 3 trades active. The one was like the longest one, 11 days. And so far it made 244%. Okay. So in total, these 3 trades, they made 130 USDT. So that means on average for the last week. So it made 130 USDT to my balance of only, at that time it was around 470. So you see, that's an insane result in futures trading. Yeah. So as soon as we release this bot, we will have a new type of webcast where I will explain step by step how to launch long bots to trade on the upside, and short bot so that you could generate returns on the downfall. Because you know that in futures trading there is a thing known as short selling, and trading short combo bot, you can utilize this mechanism of short selling where you generate returns on the downfall. So if you think the price falls, then that's the best time to launch the short bot that will generate you returns, applying the same logic as if it would generate you returns on the rising market. Okay, so this is something that we will cover step by step as soon as we launch this bot. But as of now, I just wanted to show you this big thing, this impressive product that we are about to release. So be patient, as we are still conducting some minor developments so that you guys would have the utmost experience as we release it. Okay, so yeah, that's something that I wanted to show you, to surprise you with. So stay tuned. Make sure to read our newsletters, subscribe to YouTube so that you will not, so that you would be notified as we launch this product pretty soon. Let me see your questions. So where can I learn to trade in crypto? There is a question. Well, I will answer to it, even though that's not the topic of this webcast, but still, at Bitsgap we have blog, and in blog you can go to analytics and trading, where we have some very useful instruments so that you could use them in not only automated trading but in smart trading as well. So for example, there are things like for automated bots, here we have 2 articles where you can just grab ready-made strategies based on pattern formations. So you see full explanation where you should plot the trading range, how you should plot it, where you should plot your stop loss, all that stuff. It's explained here. Just go to blog and grab these ready-made strategies if you have, if you lack experience in automated trading, or even if you are an experienced trader and you lack some trade ideas, then go here and grab your strategy. These articles, I made it, guys, for you. Just grab it, take it, use it, experiment, and yeah, find the best one for you. So also we have some indicators covered. So some complex one like order flow as support and resistance, RSI, moving averages, Ishimoku cloud. So these major things covered. So here you can find some useful information, lots of practical stuff here, because we only focus on the practical stuff. So as you read, you get around 80% of like what we combined into the practical experience. So no, like only a bit of theory. The rest is just practical experience that we elaborated, combined, united, and put it here together. So yeah, that's answering to your question about the education. What else? Yeah, so it looks like I've covered all the major topics as I pointed out at the very beginning. And you've noticed that we also have this tool known as the backtest. So I will briefly explain. The backtest is the tool that you use to stress test the configuration that you are about to launch on the real bot. So for example, you want to launch the bot on let's say Aave to BNB, yeah, with this trading range, with the amount of, let's say, 40 grid levels on the let's say classic bot, and you wonder, no, let's set 50, and you wonder what would be the return if you would have launched the bot with these settings but 1 month before. Then you go to backtest, and here you have the results. You see exactly 1 month period. So on this range, it would make you 5%. That's just in bot profit, okay? Also, here we don't take into account the value change of the base currency of, in this case, that's Aave. So in reality, the number could be different, but still, in backtest, you get the idea of what would be the return generated by the bot, and that's something that is one of the key metrics here, you see. And in the backtest, you can stress test it. So what if I would have launched the bot on the same period, but with maybe only 25 grid levels? So what would be the return then? You see, it would be 6.79% instead of 5%. So playing with it, playing with these configurations, you can find out what would be the result back in the past. To use these metrics, to use this past data as a kind of a benchmark for you, so that you would grab the best configuration, which has proven to be successful. Like the most successful one so far is this one with 25 grid levels. Yeah, so maybe that means that you should launch the bot with these settings, which historically has proven to be the most profitable based on this comparison, this quick comparison that I just made. So once again, backtest is to stress test any configuration on any coin so that you would get an idea of what would be the return back in the past, to use it as sort of benchmark for future projections, okay? And Okay, so I actually went beyond the time, and yeah, once again we covered all of the topics that I wanted. The primary aim of our webcast is to teach you on how to use all the tools that we have to discover your own ultimate strategies. And you have everything for it. You have the demo mode, you have the backtest, so that you can stress test and experiment absolutely risk-free until you find your best strategy. And once you find it, grab it and go trade on the real account. That's the thing. That's the formula of success. That's basically the best formula to to risk as less as possible. Because some beginners, they tend to think that they need to risk their real money, and they don't even know about the existence of the demo mode and the backtest thing like we have here at Bitsgap. So they start trading on their real money and they lose their entire deposit. One deposit lost, next deposit lost, and they get really confused about trading, frustrated, resentment, and they never come back trading. So that's why we made the demo mode and backtest tool for you guys, so that you could experiment risk-free to discover your optimal strategy before risking your real money. Once you find your best strategy, once again, grab it and go for it. That's the ultimate strategy. And yeah. So, and also my aim is to bring you as like the most value, and that's why I really appreciate your feedback. I always read your feedback, even that you write after the webcast. I always read it, so that next time I can improve the quality of the webcast, so that you can grab even more insights and knowledge from the webcast. So yeah, that's it for today, guys. I really appreciate your time. Once again, I never take your attention for granted, and that's why I always do my best to bring you the most on this webcast. So thumbs up if you like this webcast, subscribe, follow us on all social medias where we are present, and I hope to see you next time, and hopefully next time we will be able to trade on futures board as well. Okay, so pretty soon we will launch it. Be patient, and you will just wait for the time. You will be notified, and we will jump into this new adventure together. So thanks a lot again, and yeah, appreciate. I wish you profitable trading. Stay safe, and see you next time. Thanks, and bye, guys.